Chime is pulling $180,000 in deposits per day from community banks, while your customer information file can't sync account data in real time. Still running that same core? By the end of this video, you'll know exactly what that delay is costing you, why it's accelerating, and the one action you can take this week to stop the bleeding. Here's what most bank executives don't realize. You think the problem is your legacy core banking system, but the real cost isn't the technology sitting in your data center. It's every customer you're losing while you wait for your modernization roadmap to get budget approval. It's every account that walks out the door because a neobank delivered instant account opening while your system needed 3 business days to provision a new customer profile. Let me be specific. Fiserv, Jack Henry, and FIS. The big 3 core providers serving over 70% of U.S. banks. They've built incredible systems over decades. But here's the tension. Those systems were architected for a world where banking happened in branches during business hours, where a customer information file was a record system, not a real-time engagement platform, where batch processing overnight was acceptable because no one expected instant anything. That world doesn't exist anymore. The institutions we work with are facing the same pattern. A customer opens a checking account. Your system creates the record, but that record doesn't sync with your digital banking platform until the nightly batch runs. So when that customer logs into mobile banking, 30 minutes later, their new account doesn't appear. They call the contact center. The agent sees the account, but can't explain why the customer doesn't. The customer feels confused, then frustrated. Then they start wondering if they made the right choice. Meanwhile, Chime opens accounts in 90 seconds. Real time, full access, instant card provisioning to their mobile wallet. No batch process, no sync delay. No confusion. And it's not just account opening. Your CIF can't deliver real-time updates for address changes, beneficiary modifications, or linked account relationships. Every delay is a moment where your customer experience fractures. Every fracture is a moment where a neobank looks more attractive. The data is stark. Neobanks added over 12 million accounts last year. Community and regional banks collectively grew by less than 2%. This isn't a technology gap. It's a customer experience gap created by systems that can't operate at the speed expectations have moved to. Now let me take you inside one transformation that illustrates exactly what I'm talking about. A regional bank we worked with last year, $5 billion in assets. Strong commercial lending presence, loyal customer base built over 4 decades. They were running on a Fiserv core that had been in place since 2008. Solid system, but every digital initiative they wanted to launch hit the same wall. Their CIF couldn't support real-time data access for third-party integrations. Robert Mitchell was their chief operating officer. He'd been with the institution for 22 years. He knew that core inside and out. And he kept hearing the same message from every stakeholder. The lending team wanted faster loan decisioning, but couldn't get real-time customer data into their workflows. The retail team wanted personalized product recommendations, but couldn't access consolidated customer views without running overnight reports. The digital banking team wanted to launch peer-to-peer payments, but couldn't sync transactions back to the core in real time. Every conversation ended the same way. We'll add it to the roadmap. We'll discuss it in the next planning cycle. We'll see what the core provider's upgrade path looks like. Then Victoria Chen showed him one number. Based on their deposit growth compared to regional competitors, they were losing approximately $4.3 million in deposits annually to institutions with more responsive digital experiences, not to massive national banks. To regional competitors their own size, who had modernized their core infrastructure or implemented middleware that made their CIF behave like a real-time system. Robert took off his silver-rimmed reading glasses, looked at the dashboard on Victoria's tablet, and asked the question that changed everything. What's the cost of waiting one more year? Victoria walked him through the math. At current attrition rates, that $4.3 million would become $6.8 million the following year as customer expectations continued to accelerate. The gap wasn't linear. It was exponential. Because every month they waited, neobanks and modernized competitors raised the baseline of what customers expected. They made the decision to act, not a full core replacement that would take years and tens of millions of dollars, but a strategic modernization. They implemented an integration layer that created a real-time API access to their CIF data. They rebuilt their digital banking platform to consume those APIs. They connected their loan origination system to pull customer data in real time instead of batch overnight files. The results were measurable. Account opening time dropped from 3 days to 4 hours. Digital banking logins increased by 38% because customers could see accurate, real-time information. Their Net Promoter Score for digital experience jumped 22 points in 6 months. But here's what Robert told us mattered most. His lenders could now pull a complete customer relationship view in seconds during a loan conversation. Not tomorrow. Not after the batch run. Right now. That changed how they competed for commercial relationships. It changed how fast they could say yes. It changed how customers perceived their responsiveness. They didn't rip out their Fiserv core. They made it behave like a modern system by adding the integration architecture it was missing. This is the pattern we see across institutions that are winning right now. They're not waiting for their core provider's 5-year roadmap. They're not debating whether to switch from Fiserv to Jack Henry or FIS to somebody else. They're building the connectivity layer that makes their existing systems support real-time customer experiences. Because here's the truth. Chime isn't winning because they have better technology. They're winning because they removed every friction point between a customer's intent and account activation. Every hour your CIF can't sync data in real time is another hour you're losing that race. So here's your one action for this week. Open your core banking admin portal. Navigate to your customer information file settings and audit how long it takes for a data change in one system to propagate to every other system that touches that customer record. Account opening, address change, product enrollment, beneficiary update, time every sync. If any of those answers come back in hours instead of seconds, you've found your gap. That gap is costing you customers right now, not eventually. Today, forward those results to your IT lead and your core banking relationship manager. Ask one question. What's our path to real-time CIF synchronization, and what's the timeline? Their answer will tell you everything you need to know about whether you're on a path to compete or a path to gradually lose ground. The cost of waiting is higher than you think. The next video proves it.